Adamma Mbachu, team lead currency trading at Axis Bank, joins me to discuss this. Adamma, thank you for taking the time out to join us today. We're at midweek, so I'd like you to just bring us up to speed on how trading has progressed so far at the different market segments, treasuries, bonds, and of course, FX.
Good afternoon, Esther, and thank you for having me. Okay, I'll start with the money market. Okay, the market has been pretty quite liquid. We have seen an injection into the system. We saw about a 230 billion from OMO maturity, and then the market expects FAC inflow to come in today. So we have seen the rate trade from 12% levels all the way down to 6% levels. Now, moving into the fixed income market, like you said, the highlight of today is actually the Treasury bills auction that is being conducted today, where the DMO is going to offer about 115 billion. So market participant has been quite cautious. The market has been trading cautiously as they expect the rate to come out, slightly lower, given where the secondary market has been trading. So we actually await the auction, and then we expect the stop rates to come out slightly, lower than the last auction. Then going into the foreign currency market, we have seen a bit of stability in that market. We have seen a bit of appreciation in the market in the I&E window, where the market closed at 416 with a marginal appreciation of 6 kobo. We have seen consistent interventions by the central bank, where the central bank has been intervening for both the foreign portfolio investors and the small, medium and enterprises, and also for the invisible transactions. So we expect a bit of stability going forward in that space.
So for today's action, what are you expecting in terms of how the markets will play out today? Obviously, I know that the OMO auction will be center stage for investors. And I suppose I could also ask you what expectations are in terms of rates and the stop rates.
Yeah, like I mentioned earlier, we expect the stop rate to come out slightly lower from the last auction. I think for me, I'm looking at probably a 25 to 30% drop. But we actually still expect a drop in the market, because already the secondary market is actually trading at the 4%, 4.5 level. So we expect a stop rate, especially at the long term, the 1 year maturity, to come out around that.
How would you describe the liquidity levels in the last 2 weeks and how it's impacted the market?
Well, the liquidity levels were really up last week, but however, we saw some outflows actually, that took out funds from the market. We saw the payment of the retail auction. We saw the CRL debit taking out some funds in the market. However, like I said, this week, the market has been quite liquid, as we saw fresh inflows into the market. We saw the OMO maturity of 230 billion, and then the market still expects the FAC inflow coming in today.
Okay. So help us understand where the 365-day paper for treasuries, what rates is it going by now, and do you foresee it going lower? I know there's been, tracking it in the last 1 month, it's been somewhere between 4 and 5%, correct me if I'm wrong, but help us understand if it's still at those levels and if you foresee it going lower.
Yeah, like I said, you're very correct. The market is trading at 4.5% levels currently right now. And the last stop rate, it came out at 5.2, which was a drop from 5.3 levels from the previous auction. So we still see a continuous drop because there's a lot of liquidity in the market, and we have seen high interest from the market participants. They're actually going bullishly in this auction, and as such, we expect the rate to come down lower.
All right, finally, back to the FX market. I know there's been some pressure on the I&E window in terms of demand. Talk to us about supply and demand dynamics and to what extent you see the Apex Bank meeting orders.
Well, the supply-demand pressure has been there for a while in the foreign exchange market, and I think it's something that every participant has been actually accustomed to. However, the central bank has maintained their interventions. They have actually come up with certain policies, certain initiatives. You talked about the RX 200, where they have to, we are looking at raising funds from non-oil, export proceeds. So we are looking at a lot of initiatives coming from the central bank to manage the foreign exchange, and we'll continue to, wait on them and support them in that regard. However, the rate has been maintained at 416, 417 levels at the I&E window, despite the pressure.